we look at all of the information that's talking about the LME being bled dry to its lowest level of inventory in silver since they started keeping records, I think, in 2016. We look at the massive drawdown in silver off of the COMEX to where we're at about 38 million ounces in registered category. This is the registered category are the bars that are available for immediate delivery. That's the amount of silver that the Bank of India imported in the month of August. So you have the price setting mechanism of the world with about as much silver in it for delivery as the Bank of India imported in 1 month. That's not a good thing. We see 100 million ounces drawn down from SLV and other ETFs over the last several months. We see from the top down the biggest money in the world, the people that are closest to the information, quietly and using the suppressed price, Andrew, to run cover for their massive acquisition and removal of counterparty risk off of the world's exchanges. Now, this right off the get-go is really, really unusual. And I think this is what gives me, and has for quite some time, great optimism that we're on the right path. Talk about the sovereign mints. You look at there's 6 major mints in the world. There's one in your backyard there in the United Kingdom. There's South Africa, there's Australia, there's Austria, there's the US, and there's Canada. All of which have been, over the last several weeks and months, really the model of inefficiency. No one quite as bad as the United States Mint. But in all the years I have done this, Andrew, and what's interesting about this is in the context of a falling price, one would associate falling price with an increase in supply because demand and supply move inverse of each other. And if the price is falling, one would assume there's no demand, which would mean a plethora of supply. In the 33 years I've done this, Andrew, I have never seen anything quite like this, with the exception of 2008, when everything within a week just was gone. And that's a discussion we can delve into whenever you'd like. But what I will simply say to you is that right now, I think the whole world has awoken to inflation, to anxiety, to war, to currency debasement, to political and geopolitical, to divisiveness, all of these things that are spinning and spinning and spinning in every different direction. And all of a sudden, people are waking up. So the metal that used to flow to the U.S. from the U.K. and Australia and Austria and South Africa, it's not anymore. The premiums are a reflection of supply and demand. And as one of only 27 U.S. Mint authorized resellers in the world, for 30 years, we've been doing this for 33. The last 2.5 years, everything has gone upside down since the pandemic. Everything. But let's say you called me, Andrew, on Thanksgiving Day, which is the third Thursday in November here in the U.S. You called me on Thanksgiving Day and you said, hey, I'd like to buy 10,000 Silver Eagles from you. What will you sell them to me for? I'd say, sure, Andrew, I'll sell them to you at $3.19 over the price of silver. And you'd say, well, what will you buy them back for if I call you on Christmas Day? Well, Andrew, I'd pay you $2.65 over. And those numbers were pretty much consistent my entire career, going all the way back to 1989. If you would have called me 3 months after, in March, and said, hey, those coins I bought from you, what are they worth now? I would have said, I'll pay you $11 over the price of silver. Right now, at $16 over the price of silver, on Silver Eagles, we'd be the least expensive in the United States. For a very long time, the U.S. was considered the bastion and island of safety. When times got tough globally, everyone rushed into dollars, and I would submit that this is a waning phenomenon. And when you have the Western markets and when you have gold and silver denominated in dollars and the dollar is losing its global appeal, so too is the ability of the cartel to suppress the price. And perhaps when you think of the no-look pass in basketball or any misdirection in any sport or game you have ever played, understanding that the book The Art of War, which is all about misdirection, is taught in every major business school in the world on corporate hierarchy and in law schools on formulating arguments, and it's mandatory reading at West Point and at CIA. The world understands misdirection, and when you see the price being suppressed, yet the world's exchange is being bled dry. When you see record premiums, not just in the Western markets, but on the Shanghai Gold Exchange and in Dubai and other parts of the world, it tells you that the smart money who's closest to the information spigot is using this misdirection, is using this suppression in price as a last-ditch effort to clear themselves, I think, to get metal and to reposition themselves. I really do think we are, and you can see it by the bleed down of supply in an environment where everything in your mind should be, well, why would anyone want metal when it just does nothing but fall in the midst of 40-year high inflation and chaos globally? It's an archaic relic. It's exactly what they want us to think, and that's exactly why they're able to bleed dry all of these exchanges. This dollar screaming higher with agricultural and energy prices denominated in dollars. Well, first of all, it's a colossal attacks on emerging markets. But a lot of these countries won't buy as much oil because it becomes too expensive. And do I think that they'll step in to intervene? Yeah, I mean, you do think they will. You have to think they will. The bond market thinks they will. That's why you have an inversion of the yield curve. Because if you raise rates high enough, which attracts more interest in the dollar, you're going to blow up the economy. You're going to blow up the stock market, the bond market, and the real estate market. And what's very difficult, it shouldn't be difficult. It should be easy for people to understand. This is why the bond traders are saying that they're going to pivot. That's why you're seeing higher rates on a 2-year than you are on a 10-year. It shouldn't be that way. They're saying that because you have 3 years worth of money printing that is greater than anything ever prior to the entire history of the United States. They printed more money in 3 years than they did in the entire history, and that blew up asset values to all-time highs. If you continue, as the Fed continues to raise rates, not only does it put a colossal tax on the entire world, it gets the United States that much closer to a collapse in stocks, bonds, and real estate, the 3 pillars of wealth in this country. And I think the betting, the smart money, the bond market, says they'll go death by hyperinflation, that as soon as it gets too painful for the markets to handle, they will step in. They will start to ease, lower rates, try to lower the dollar's value. But I don't know when that breaking point is. And probably sooner than later. I think, you could say they're talking about a 75 basis point increase in the next FOMC meeting. Well, if instead they only do 25 basis points instead of 75 basis points, as far as I'm concerned, that's a pivot. So I guess we'll have to see. The bond market, the smart money, they would say yes. And I don't know how far a gentleman whose hero was Paul Volcker, being Fed Chairman Powell, don't know how far he's going to take it to the mat.